Assalamualaikum and hi everyone. Our topic for today is withholding tax. Okay, what is withholding tax? What do you know about withholding tax? So withholding tax or retention tax is an income tax to be paid to the government by the payer of the income rather than by the recipient of the income. The tax is thus withheld or deducted from the income due to the recipient, which means that the payer, before they pay to the recipient, they withhold a portion of income as tax due to government. And governments use withholding tax as a means to combat tax evasion or loss of revenue to government, especially from non-resident person or foreigner. As for Malaysia, withholding tax is an amount withheld by the party making payment, or we refer to as payer, on income earned by a non-resident or the receiver or payee and paid to the Inland Revenue Board of Malaysia, meaning that the amount will be paid to the IRB. Payer refers to an individual or body other than individual carrying on business in Malaysia. So payer should have a business in Malaysia. Payee refers to a non-resident individual or body other than individual in Malaysia who received the above payments. Okay, the payee or the receiver of the income, non-Malaysian, non-resident individual or other than individual means probably company or business who received the above payment. Okay. So in withholding tax, we involve payer, payee, and also the IRBM who finally will receive the amount of the withholding tax. Alright, this slide explains to you the type of income that is subjected to the withholding tax with the rate applicable to each of the type. Okay, first one is royalty payment. Okay, means when the resident person or company paid any payment to non-resident in the form of royalty, they need to withhold a portion of the income for the purpose of withholding tax at 10% rate, and it is final in nature, which means that the payee who receives net of the tax, the income, do not have to report the income and pay again the Malaysian tax. This is stipulated under Section 109 of the Income Tax Act 1967. Okay. Next is interest income, and the rate is 15%. Public entertainer who receive the income from Malaysian payer, the rate is also 15%, similar to interest. And then special classes of income under Section 4 capital A also will be applied 10% withholding tax. And then the income under Section 4F, other income, as you learned in Tax 1 previously, the rate is also 10%. And all of these are final in nature, which means that, like I told you just now, the receiver do not have to fill in the return form and recalculate the tax again. However, for last type, which is the contract payment, okay, contractor who is non-resident in Malaysia but working in Malaysia, probably they built a bridge in Malaysia, like second bridge in Penang. So when they receive the payment from Malaysian resident, individual or company, the income that they received is withholding tax at the rate of 10% and 3%. 10% is on the contract payment and 3% is on the employee portion of the contract. Okay, and this withholding tax is interim in nature, which means that it is not final. The contractor, which is the non-resident, need to report again the income to Malaysian government, and they can apply any like deductions and whatsoever, and if the calculation differ from the withholding tax, they can request for refund or pay additional tax payable if necessary. And these are the sections covered in the Income Tax Act lah, you can see. Okay. Okay, now let's understand the concept of withholding tax using the picture as you can see in the slide. Before I explain further, I would like to introduce on section 3 of the income tax, which that you can see in the pink box here. Okay, it says that income tax shall be charged for each year of assessment upon the income of any person accruing in or derived from Malaysia or received in Malaysia from outside of Malaysia. So in the concept of withholding tax, if the income is derived from Malaysia by the non-resident, therefore the non-resident should pay the income tax as it is fall under the scope of charge mentioned in section 3 of the ITA. So, withholding tax is used by many countries, including Malaysia, to tax the foreigners, especially on income received by them from Malaysian payer in order to avoid the loss of income from them. As you can see in the picture, there are three parties involved in the withholding tax here, which are first the payer who is resident, and next is the payee who is non-resident, and the last one is the IRBM as the collector or the tax authority who finally will receive the amount of tax. Okay. Alright, the mechanism of withholding tax starts when the payer want to make payment. Okay, payer want to pay the payee on the income as we discussed just now. The type of income which is subject to withholding tax is either royalty or interest or payment to public entertainer or contract payment or whatsoever as we discussed just now. Okay, so let's say the payment is 100,000. Okay, let's say I put here the okay, the payment is 100k. Okay, if the withholding tax is 10%, therefore the payment here is, okay, probably I should not write the 10%. Okay, so the payment to the payee is only 90% or 90k. Okay, and the rest, the 10% would be paid as withholding tax to IRB. Okay, so the time to pay to the IRBM is within the 30 days after, okay, after payment is made. Let's say the payment is made to the payee on 31st October 2021, for example. Okay, so the last date the payer should pay to IRBM should be on 30th November 2021 because the first day is calculated on 1st of November, okay, which is the day after payment is made. Alright, so I put here the book symbol because the payment will be recorded by the payer in its book. Okay, when you are accountant, you will record any transaction, right? So the transaction recorded in the book can be a proof or evidence that the payee or the non-resident receiver received the income from Malaysia or derive income from Malaysia. Okay. So what you need to prove? Okay, for the withholding tax, first you need to prove that the payer is resident. How do you know the payer is resident? By looking at if it is company, whether the company is registered in Malaysia, whether the management and control happen in Malaysia. Okay, or if the individual resident, so you can also see the number of days stay in Malaysia. Okay, number two, you need to prove that the payee is non-resident. Okay, so non-resident meaning that the item that I said just now is not happen in Malaysia, or it is registered overseas, the company's name is overseas, it doesn't have PE in Malaysia. Okay, that is the indicator of non-resident. And then the non-resident should have business dealings in Malaysia. So number 3, you should prove that the income derived by the non-resident is from Malaysia. So how do you know it's derived from Malaysia? Because first, the business dealing should happen in Malaysia. It's not happen overseas, yeah? It should happen in Malaysia. And then payer should be resident in Malaysia. Okay, and number 3 is that you need to highlight that payer record the item in its book, as I mentioned just now in the previous slide. Okay, so payer deduct payment as expenses in its book. Okay, whatever they pay to the non-resident is recorded as expenses in the book of payer. And number 4, you need to prove the type of income from the foreigner which is subject to withholding tax, which means that the type of income should fall under one of the 4 categories in our previous slide. Okay, either royalty, interest, public payment to public entertainer, or special classes of income in section 4A, or ada lagi, not only 4, section 4F, paid to the non-resident, or contract payment. Okay, so ada berapa? 6. And finally, if the information given to you, you need to also determine the due date to pay to the IRBM by the payer. Okay, when is the due date to pay to the IRBM, so that the payer do not have to pay any penalty. Okay, next I would like to explain to you on the administration of withholding tax. First, the non-compliance of withholding tax. It covers the fails to pay the withholding tax by payer, late payment of withholding tax by payer, and fails to pay the penalty also by the payer. Next, appeals. Appeals can be made to the IRBM, either payer or payee, within 30 days from the due date of withholding tax paid to the IRBM. And next, relief. Okay, if the payer has paid to the IRBM excessively from what it should pay, then it can request for relief. However, if the payment is not paid yet, so the deduction is not allowed by the payer in the calculation of chargeable income. Okay, so relief can be applied within 1 year after the end of the year when the payment has been made to the IRBM. Okay, if payment has not been made, so of course I cannot apply the relief. Okay, next in the box here, okay, 1, 2, 3, 4 box. The first one is the due date to pay IRBM. Okay, related to the non-compliance, it should pay 30 days. Within 30 days after the payment has been made. So meaning that if payment is not received by IRB within this date, so the non-compliance has been conducted by the payer. Fails to deduct or remit. Okay, fails to deduct the withholding tax before payment to the non-resident, also a non-compliance. And fails to remit, also fails to deduct to payee is okay if the payer willingly to pay its own pocket money as withholding tax. Okay, and fails to remit is where the payer do not remit to the to IRBM. So it can become together, meaning that fails to deduct and fails to remit. Okay, if the payer fails or forgot to or don't know that he or she should deduct withholding tax, and as well as do not remit to the IRB the amount of the withholding tax, therefore it already is already do some non-compliance. So therefore payment is disallowed. Payment to the non-resident is disallowed as deduction against the gross income, meaning that in calculation the chargeable income of that taxpayer, taxpayer cannot deduct the amount paid to the non-resident. Okay, late payment, the penalty is 10% on the withholding tax. It is stipulated in the section 109 capital B. Okay. If the taxpayer or the payer, which is resident of Malaysia, claim the deduction without remit it to the IRB, claim whatever expenses that paid to the non-resident. So it is a non-compliance under section 1132 under the incorrect return or willful evasion. So this is a serious offense. So that's the end of my presentation today. Under this topic, withholding tax, we are still looking at the taxes between two or more countries, not only inside of one country. That is why I use the images and not from Malaysia but overseas to indicate the link between Malaysian tax as well as overseas. Thank you for your attention, and if you have any inquiries, you can email to me as the email address stated in this slide. Thank you.